This is Matt Russell from the FX Power Course, and welcome to the Daily FX Walk.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using for the past, I'd say about 2 weeks now. As I mentioned a few weeks back, or about a week or so back, we had the breakout below that lower support line, and now I'm expecting prices to come back and test the previous support line, which should now act as resistance in the future. This is a trade that I specifically mentioned during last week, looking to enter near the level of this low, and then prices did take out that low by just a few pips, but we did not have a close beneath the level, and then we've had a subsequent rally in the pair. And if we do take out that 90.87 high again, I'm expecting prices to come and test this previous support line on the opposite side, where it will act as resistance. With that being said, if you are flat right now, I really don't see any favorable risk-to-reward entries at this point in time. The next chart is the Aussie Kiwi, and not much has changed here. Again, I mentioned that the short trade off the doji candle here, placing our stop just above the high. This high right here is about 29.35. The sell-off from that doji continues now. I've added a simple channel line here just to give us a little bit of reference in terms of how the price action is playing out here. We can see that we had a spike beneath the line and then a close above it. So moving forward here, I might personally look to take a little bit more profits here in this short trade as prices do continue to test this lower, very short term and not very reliable lower channel line here. The next chart is the pound Swiss, and not much has changed here in terms of me just waiting for prices to come down and test this longer term support line. Prices are now approaching that line. I can give you an exact price. Just above that 65 figure is where that support line is located right now in relation to today's open candle, so that's certainly within the realm of possibility within 24 to 48 hours. So certainly keep your eye on this simple support line formed again by just connecting that late 2008 low, and this is, I believe, the March, about the second week in March, this low right here, and now we might get that third touch, which in my opinion is the best place to enter on a support line trade. And again, we'd look to enter just above the line with a stop maybe 50 to 75 pips beneath the line. The last chart is the Euro Swiss. Not much has changed here either. Prices again just sort of meandering here sideways. As I mentioned, I believe prices will come back and test this longer term resistance line. We had a very sharp rally, and in fact that's about only 1 day's of worth of price action here, and now this could be prices just sort of consolidating here, correcting if you will, and then we might have a breakout again. The target would be the longer term resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.